Welcome to Striking an Option, the show that reveals the options you have to better navigate markets. I'm Jeff Kilberg, and I'm joined today by Bob Icino. Welcome, Bob.
Good to be here, Jeff.
Well, markets are moving higher this week. Is this a function of all the central bankers? I know we heard from the ECB today, or is this more of the potential trade tariff resolution?
Well, I think the key word there is potential trade tariff resolution. We don't have a resolution, so it is continued central bankers' effects on the market and more easy money.
And ECB delivered today. What is the Federal Reserve going to bring to us this month as well?
Well, it's looking more and more like they might disappoint a little bit. The CME Fed Watch tool has actually moved the probability of a 50 basis point rate cut completely off the table.
That's really interesting, and that CME Fed Watch tool is a great piece of the puzzle as we try and figure out all the central bankers here in the month of September.
Yeah, definitely. There's actually 11% chance now that they do nothing.
Oh, there it is. Well, let's get this first lightning round. You ready?
I am ready.
Gold. Well, when you talk about central bankers, you have to talk about gold because gold is kind of seemingly the antidote to all the $17 trillion of negative yields.
Yeah, I think gold was really interesting, especially in light of the ECB meeting where it rallied initially and then came off. And I think that's kind of the theme. So what I want to look at as an example is selling the September week 3 1550, 1600 call spread in gold. Selling of this call spread allows an investor to collect $230. It expires in week 3, September 20th, so it encompasses that Fed meeting.
And this makes a lot of sense. If you look technically, there's been a lot of challenges for the gold contract to stay elevated above 1550. The October futures in this underlying future contract was trading around 1503. And that at-the-money volatility, where was that at-the-money vol?
It was about 17, and again, that's historically elevated, although there's been quite a bit of volatility lately.
Well, here on Striking Option, we do like to sell elevated premiums. So remember that these are trade examples, folks, not trade recommendations. Let's move into the second lightning round, Bob.
Let's do it.
Trade tariffs. Well, it is interesting to see all of a sudden there's a lot of optimism in the market. We're about 1% to 2% away from all-time highs in the E-mini S&P 500.
Yeah, a tiny bit of bending on both sides. We got a little bit of a concession in the form of exemptions from China. We got a delay of the increase in tariffs that were supposed to take place October 1st, so we're getting a little bit of optimism.
Well, the optimism in conjunction with the fact that we're going into the end of the quarter here for Q3, I want to use my trade example to be a buyer of a new all-time high. Yes, a little bullish here, but at the end of the day, I want to see what this is going to cost an investor to participate in an upside call spread. So I want to be a buyer of the 3050 call. It's going to cost about $350 to buy that call. I'm also going to be a seller of the 3100 call. It's only going to allow me to collect about $50. So Bob, for $300, I can participate in a new all-time high.
Yeah, I like this, and it's interesting to point out that you're not actually calling a bullish call. You're saying let's participate in new highs if they happen. The SEP futures and the underlying of this debit spread should cost an investor about $300. The underlying was about $30.15.
And remember, the expiration on this was Monday, September 23rd. There's Mondays and Wednesdays and quarterlies. You have to understand which contract, but I like having a couple extra days here as we do see a lot of optimism in this trade tariff conversation.
Yeah, pretty low at-the-money vol in this, but also you could potentially take the E-micro S&P futures and take that at a stop in at about 30.50 and participate that way.
Well, that makes a lot of sense in the micro E-mini S&P 500. If you have a stop which initiates your position, so you'd be buying in on a stop, buying that new all-time high. And what's interesting about the micro E-minis, we've seen over 50 million contracts they've traded since that May 6th launch, Bob.
Yeah, again, just shows the value of these contracts in controlling risk, adjusting options, and maybe taking advantage of a new high.
All right, great stuff per usual. Thanks for coming on to Striking Options, and please tune in every week as we will continue to strike options.